Good morning. Happy Father's Day. It is the 18th. We're going to run through a whole bunch of tickers. First, I want to give an overview of the market, even though I will do one tomorrow night because Monday the US markets are closed. So the weekly game plan will come on Monday night. So first, if you do submit tickers on the form, just use the box that say tickers. If you put tickers in the comments, I miss them because I have an automated system that picks them up. So you use multiple entries if you need more than 4 tickers. Don't put some in the box. Okay, here we go. So I started with this visual on purpose. This is the S&P. And you can see how much it rallied in the last just few days. This is the end of May. So we've gone pretty we broke out definitively. Well, with that comes a check back to where we broke out from. We haven't had one. So if we just have a normal dip, it's going to feel painful. Like if we go back to here, it's like more than 5%. Don't freak out when you see it happen. It's just the normal way to break out. You consolidate for a long period of time. Boom. You consolidate a little bit, but you need to check back at least halfway. So if you just use the Fibonacci eyeball of 50%, halfway is 428, and that will feel pretty painful. 2 to 3% and 5% or more if you do the whole thing to the breakout level. That's just a warning, a feeling warning. All right, let's start with the tickers. Now they're alphabetically ordered, and I will break them up into 3 different videos. All right, we'll start with the king of stocks, Apple. So I'm going to answer this from, I'm going to say a lot of, this is not an obvious entry point. Okay, and although this is an obvious company that you'd want to invest in, this is not an entry point to invest in all in for the long term. You could make money, but there could be better entry points. So having said that, there is more upside. This is a 1 hour chart. This is a 2 hour chart, and this is a daily chart. And the daily chart shows that there could be a breakout that has already happened and that it's headed towards 205. I don't know. When a stock consolidates this long in this wider zone, when it breaks out, it overshoots higher. It is possible, but even if it is, and like traders are fine. Traders can buy high, sell higher. Investors tend to buy and hold. I don't know if I would invest in Apple right here. I would use the dip to do that. Where is the dip going to come from? Anywhere. You never know. Headlines are incredibly sharp these days. Real or fake, they move markets. So I guess I could wait for a dip on Apple. Where to depends on your patience. I'm okay missing out for 6 months. Some people, nope, they get the fire. They need to invest in it right now. For those people, I would say, why don't you just take a small position and leave a lot, and I mean a lot of room to add to lower your entry price. AbbVie, if AbbVie can get to 140, maybe it can get to 144. I'm done investing in any stock that has to do anything with healthcare, given what happened to UNH. We had a trade that was beautiful, and then out of nowhere, some stupid headline from the CEO that wasn't even a headline. It was a comment he made when he had a speaking engagement that tanked the stock, ruined the trade for now. So these guys are prone to headlines. FDA, blah, 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 blah. Anyway, so above 140, maybe it gets to 144, but it has a lot of problem areas above. Below it, it does have some support immediately at 135, and even more important support at 131. If it loses 131, I would get out. I don't know what's below that. So let's zoom out and find out. Yeah, so I can contend here that it's already in a descending trend that will probably lead it to 125, 124, maybe even 120. If they don't recover this area of 150, 148, they lost the neckline and they're going to trickle back down. That is a possibility, so keep your mind open on this one. Airbnb, we've traded it well so many times. This is not an obvious entry point. If you force my hand right now, I would probably fade it by selling a credit call spread against the credit put spread that I have. I personally sold puts in it, and I shared a credit put spread as well. I did take both because I needed to know that it was tradable, and I will not add to it. Um, Maybe I could do this and sell a credit call spread up here if you want the drama. Not an obvious entry point to go long. The stock here has had many failures, so it could run another $2 to $3, maybe even $5. But what is your goal? Make sure your goal matches up the opportunity. All right, so I don't remember what that purple box was. I wonder what that was. Was there an earnings? Anyway, not an obvious entry point. Good company to buy on dips. Accenture. Okay, we've heard not an obvious entry point. So the person who was asking me about that, it is a breakout, but the breakout was here. This is about the target of that breakout. So if I zoom out a little bit to get more clarity, you definitely have a stronger resistance level at 345, that area right there. It's been a failure since February 2022. So be careful. I think it's a good company. I haven't looked at the P&L in a while. I mean, there's nothing extravagant in it. Buying dips would be better than chasing, in my opinion. So a dip to 305 or 295 would be great. In fact, I'm going to put an alert for myself. Adobe. Okay, so we bought the dip in Adobe and it was problematic for like a day, and then this happened. It's running on the back of artificial intelligence, and that is a concept that's hard to short. This most definitely is not an obvious entry point for Adobe, and if you're now tempted to buy it, I would challenge you to look inside yourself and see if you're chasing because of fear of missing out. You already missed out. There's no fear of missing out. You already missed out. On how much? On a lot of much. I think I went long here somewhere. So if you followed me, that was 50% below. Now the feeling kicks in. That means it's emotional. I wouldn't touch that thing until it comes back down to 410 maybe. And it will. One day it will. You can't kill the hope of artificial intelligence so quickly, so I would step away from that one. If you're actively trading it, buy the dips into pivotal zones. The first one is 472. The second one is like 445, 450. So I can see some buyers here and some buyers here on dips. But that's for traders, not for investors. ADM. This is not an obvious entry point. I know it looks like a breakout, infraset and shoulders or whatever. This is a pretty tough fail. So are these. So these tails, I would want to watch them. Like what happens next week is pretty important. Look at these sellers up here at 77, into 77. So be careful. And 78. Again, are you a trader? Are you an investor? If you're an investor and you want to nibble, that's fine. Just leave room for error. This could drop to 73 and it would be a better entry point. Affirm. I'm tempted to not look at these for a long time. SoFi, Affirm, and all of that. I looked at them when everybody hated them, made us money. Up here, they're not so good, chart-wise. This is a good base. But this is also a head and shoulders that would bring it down to 1450. So I would like to enter inside this cluster, or better yet, inside this cluster if it gets down there. So I will put an alert for myself here. Whoops, that's not what I meant. I will put a better alert lower. I know sometimes it seems like there's no way we're going back there. Okay, we can go back there in 10 minutes if the market crashes or corrects. C3 AI, same comment. So this company P&L is pitiful. I say that with complete confidence. This is a pitiful P&L for what it is. So here's my concern. This is a company that has AI in the name, and they couldn't even grow sales. It's not like they missed estimates. They had a shrinking of sales, or maybe flat to shrinking of sales. So when are you going to grow? When AI buzz is out of the headlines? That's my challenge to them. Show me you can actually grow sales. Your expenses are as big as the sales. So Palantir would be a better choice, but even that one is far extended right now. So this is not a stock I would invest in, but if you want to do research and invest in it yourself, I would encourage you to do that. It's probably a headline of acquisition. The breakout from 34 and the breakouts from 24 are very evident, so it depends on where they go. Here's a box you need to put on your radar. This one. These tails look very sharp, so hard sellers above 70, which is a mile away from here. I'm just giving you a big picture. The stock is not for me as an investment, and as a trade, it's way too high for my taste. So then you're becoming a trader versus investor. If so, I'll give you lines 39.50. So anything below 40 becomes slightly interesting, and definitely around 32 interesting to buy the dip. Albemarle, let's step out and see where it's at. Okay, a lot of charts are looking the same way. Inverse head and shoulders breakouts from below here, and the extension has gone way too far. If I'm not long this one yet, I wouldn't get long here. This looks like a pretty tough spot that it's going into. Anything above 230, 240 is going to be difficult. That's not my opinion. That's what I'm looking at this chart. It's already done a lot of work, and I think you have the opportunity to get into it long, $20 lower in the near term. So here's what I see happening. If we don't take out the highs from the last couple of weeks, couple of days I should say, we could bleed down here. And if that's the case and they pop and they bleed again, they could end up in the low 200s. Just from price action, it would not be bad. It's just price action. AMAT. Looks like I got something going on here. What's going on? What is this? Visibility. Let's see weeks. Okay, so I see an upside scenario, but on a dip. I'm looking to buy the dip. This is a weekly chart, so this is like an investing more so than trading. Going into this level has been not so good, except for one short period of time, which was extreme bullish, fake money from the pandemic recovery. So I would assume this does not exist. I would make this box not exist. That's the October 2021, which the markets fell 30% from there. So I would contend that this is a top for the stock and buy the dip mode, maybe into 120. AMD, same comments, exactly the same comments. And the fact is that AMD hit my target, and we had seen this target, and people still got long here. I don't understand this mentality. But it's going to the moon. Look at NVIDIA. Yeah, okay. So it's going to the moon without me. Because if I did not buy into the breakout when it was available, and now I'm buying into it, that's crazy. Now, short-term support because of these. But I still think that the rally is not going to break through this, and we're probably going to bleed down to the low 100s. I see no urgency to be long this stock, to be honest. I see it, but in fact, I showed it in NVIDIA on Friday. And when I say I showed it, I mean I left like 40% room for the upside. I sold naked calls and call spreads spread out like miles above current price, and I took small bullish positions to hedge my bet. So I think the exuberance in NVIDIA is insane. I just can't imagine what they're going to deliver in their next earnings report that's going to live up to all the expectations. So AMD will move with NVIDIA. That's why I'm mentioning it. Amazon, same story. I'm worried about Amazon. I'm thinking about, okay, so this is one of my favorite stocks from what it has done so far. I don't know this leader like I know Bezos, and I don't like change. So I don't trust it blindly. On top of it, I think the US is headed for some pretty bad economic conditions if they don't change their ways. So we were spending a lot of cash during the pandemic, and now we're spending a lot of debt. We, as in the consumers. If the you-know-what hits the fan, this whole show will end in a violent way. That's not my forecast, but that is a possibility. I'm pessimistic about the U.S. outlook as far as a world leader, so I would be very concerned about Amazon's earning ability. And imagine a time when Amazon is actually shrinking in sales. That will have devastating effect on the stock. For now, I am buying the dip. and the dip would be inside this purple zone. There is some support from that super spike on earnings. I don't know if you remember on that one right there. On earnings, it just super spiked some weird. So I would imagine they'll fight for it. So 121. So these two candles will matter. So that's why I put that purple line there, purple box. That would be an interesting spot. And then if they bounce here, what happens? If they don't make a higher high, they're going to bleed lower, probably end up in the 115 mode. That's why I have an alert. So I'm not super pessimistic, but I'm less optimistic. And at these heights, even though they are buying dips and it will follow the market, I'm being cautious from an investor perspective. I would not want to be stuck up here. APO, I mean, whenever you send me, is that the Apollo Group? New? What the hell is that? New? What is that? Is that like a reborn ticker or something? Anyway, I got nothing to say. If somebody's getting long Apollo into here, I disagree. I would love to hear the argument. What are you doing? Are you investing? Why would you invest at a place where it had a horrible outcome? But I'm in it for the long term. Exactly. If you're in it for the long term, why are you jumping in now? Now, I don't want to convince you to stay out of it. I'm giving you my personal opinion. You would never catch me doing that. At the risk of missing on a 300% win, I would walk away from it with pride. Aries, same exact thing. If you force me, I would short that stock. This chart is shortable. I don't know what's to the left here. Nothing. So it's an open air. It's hard to short an open air stock, but if you force me, I would take a debit put spread or a credit call spread if there are no earnings. If you force me. So if you've got profits, or if you're asking permission to start longs, I would tell you not for me. And if you do insist on starting longs, please leave room to add, at least double down, because you're going to have better entry spots. I am confident of that. ARCF. Look left. And last time somebody had the bright idea to buy it here, it got shellacked. The time before that, they got shellacked worse. The time before that, they got shellacked even worse. Now that draws an inverse head and shoulders. What does that mean? If you break out of this past failure from February, you have the chance to break out of this August failure, which is what the S&P is now toying with. And if that happens, it'll get to 26. I want to warn you that the S&P did that already, and these guys are just going to do it. I think it dips one more time towards 19. Whether from here or from here, I don't know. It will come back down to here. And then buy the dip. And you curl up. Up here, it's not for me. It's bearish more than bullish. Okay, ASML. Here again, you have to ask yourself, what is my goal? So I hope everyone asking for these tickers, they're not asking permission to go long. You don't have it. I would not do that. I would not let my family do that. This is not a good investment opportunity up here. It could be long term, but it's not urgent. This is not urgent for me. It's going into a prior fail. Again, I would caution you against thinking this is the all-time high. Every stock we looked at, you can erase this box. This box was abnormal. It had like $5 trillion of free cash that rained from the government. You remember that? 2021? Yep. That cash is gone, and now people are on debt. So that, act like this doesn't exist, the box. And if you do that, then you're saying, oh, I'm buying it at all-time highs. So anyway, it's not for me. Buying dips, yes, 520. Below 600 for sure, maybe even in the low 500s. Could be a potential outcome. ASO, so here's something that's falling back into a prior breakout. I get it. So here, if somebody says I'm going to go long, it just had a big dip. I get it. That's pretty good. So you do have support from this area here. And if that's a candle, you have a very wide area of support. So you may not nail it. So you may have like a 10% risk downside just from normal price action. So make sure to leave room for error. I can tell you that if it loses this one, it could get uglier and then go into the 30s. So definitely leave room for error. Why? Rallies are going to have to go into this wall and that wall. And they're probably going to sell off. So you may end up getting stuck in a descending channel. May. Okay? Or at least a sideways channel. So I would leave room to add later, just in case. Broadcom, so definitely not for me. Look at this exuberance from the earnings. That's like that Amazon spike. It's a wall until they tackle it. And this does not make a good entry idea. Maybe inside this white box. Yeah, the closer to 830 and 820, the better for me. It's a pretty particular stock chart. Boeing. So I hate it. They shook me out of maximum gains on a trade that should have been a no-brainer. If you remember, I shared an Iron Condor. It worked out in the end, but it came under fire twice, on this spike and on Friday's spike that morning. So I booked profits, and I left a little left over for Friday, and they shook me out not early morning but mid-morning because I knew I had internet issues, and I did not want to get stuck losing money because I couldn't connect to close the position. So I hate that fact. But it has been trading in a very wide range, and it looked like it was breaking out, and the breakout would have led it to 250. I would bet against it again, but I think we have an earnings report coming, so I'm not going to. So I'm done dealing with Boeing until it falls into support. Too erratic for now. BAC. Banks are not my favorite. I think there's going to be a lot of losses on credit cards. Like, I mean, a lot of losses, because if I'm right about the big picture, I'm not an expert in consumer spending and behavior, but the big picture, like you remember the concept of 4,500 versus 3,500 made us a lot of money because we stayed engaged on the long side. At least didn't cause us to be on the wrong side of the fence. And I think I have the same logic on consumer spending and consumer status. I think are people spending beyond their means, and they're spending not on cash this time. So there's going to be some credit card skippage. I don't know how much Bank of America has on that. The company is fine. So buying the dips would be good. I don't think it needs to go back up here. The yield curve is still incredibly inverted, and that's how they make their money, right? In principle, they make money on the spread between what they can borrow at, the rate, and what they can lend at. Well, the market rate has not kept up with what the Fed is doing. Like, it's still relatively inexpensive to borrow to buy a car. Okay, having said that, a dip into 28 would be interesting. Up here, it should be inside of resistance. It depends on what your intentions are. If you want two lines, how about you pick 28.7 and 29.8, about $1 width. Okay, here's a question. I own a $40 put bought on June 6th. What do I advise you do? I can't advise you do anything. You didn't give me enough information. I need to know how much you paid for it. And here's the question that you need to ask yourself. You need to ask yourself 2 questions. Why did you buy it? Is that reason still there? If that reason is still there, then you skip the next question. Have you hit your stop loss? Like, have you lost enough money? If you don't have that, pick a number that would make you get out and stick to it. Or have you hit a target, a profit target? And if you have, then stick to that. If you pass number 1 and number 2, then ask yourself, what are the odds of success with this one? Look at the delta. If the delta is too low to your liking, quit it and put the bet somewhere else with a better delta. I don't like deltas that are in the 20s. I want in the 30s, so you decide. Chart-wise, I think rallies will be met with sellers. You do have a big wide area of support. 37 has support, 36.50 better support, 34.50 most definitely better support. Is this a meme stock? Is it not? Now, if it takes out 43, it goes to here. I don't see a reason to short it. Like, there's no, like, it just fell 50%. It's not a reason to short. It's a reason to stall. All right, so we made money with this sucker, right? I sent out a note saying I want to go long with shares if I don't have them. I already have them, so I didn't add to my shares. I'm enjoying it. And I forget what the entry price was. I'm pretty sure we're green at that. This is an investment for somebody that wanted to play around with crypto and did not want to have a crypto account. And it pays, for now, a hefty dividend. Don't tell anyone though. Shh. Now, crypto in general is lower highs, lower lows. So that's not very good as a trend, but it's falling into support. It could find itself at 1250. So don't pile in all in. Like Nick said, this is a bottom. It's not. Crypto is very volatile. In fact, if we lose this, we may end up in the 12s, if not 1150. At which point I will start selling puts to create income out of this thing. And if I get assigned more shares, so be it. To me, I'm a believer in the value of crypto. I'm not a crypto fanatic, but I need an alternative to the dollar. I don't trust the central banks anymore, and this is just an alternative asset that is not tied to the central banks. Indirectly tied to the health of the economy, but because of sentiment. But it's like gold in a different format. I know you don't believe in it. You don't have to. It's an asset. Don't deny it. In fact, it's the best performing asset for the last 10 years, bar none, like hands down across anything. Okay, BLDR. I'm puzzled at the construction, and is this a home construction company? Anyway, let's go to the weekly and see what it's at. Yeah. So the person who is asking me for this, are you asking me to go long? I hope not. If you're asking me to short, you can. If you lose 120, you'll probably end up at 112. If you lose 112, you end up at 102. Those are real numbers. So a couple of red ticks this week may get you to here, bounce, and then a few red ticks after that may get you down to here. Credit call spread, debit put spread, selling a call, covered call if you own shares, buying a put to protect yourself. Yes, tradable on the bearish side. Bank of Hawaii. Okay. So if Bank of Hawaii takes out 48.2, you can end up at 54. But I would pay attention to this box here. If you put a box right here, it's an important box. So they might be chopping inside of here. If they dip into 38, 39, maybe reason to get long. Better yet, into the low 30s. So use these blips. Wow. So what happened here? This was the financial crisis, and they made a lower low. I don't think any other bank did that. Nope. Financial crisis did not have a lower low in May, if you consider all of them. So that's bizarre. Look into that fact. What is that all about? Blackstone, we traded the hell out of that thing. Wow, did we make money on Blackstone this year. Thank you. I think it was Gloria to introduce me to the sticker. It's not very liquid, but it's easy to trade when you just become very patient to find a good entry. I would be on the short side. Glory to Gloria. So I think this could be at 88, maybe even 85 in the next couple of months. And if that happens, I will redo one of these things. I sold naked puts. I sold credit put spreads. I did not buy the calls, although people who bought the calls made a lot of money. We just traded the range, folks. And if it was me, maybe, you know what? You want to sell a credit call spread? I don't know. Let's see. Is there an earnings report here sometime soon? When is that? Late July. Maybe I'm gonna add it to my watch list and see if I want to do a credit call spread for fun. Chewy, I would not get long Chewy here. I like the company. I liked buying the dip. We did buy the dip several times in the last couple of years. One of them gave us a hard time one time for a week, but if you rolled or held on, you didn't lose any money. So for me, check it out. So if they fell from here to here, they just, wow, this is exactly, this yellow line, this is the 50% retracement of the correction from February, 50%. And the S&P just blasted past that February correction. So this guy is underperforming. He does have a catch-up trade to do, but maybe on a small dip. I don't like how they jumped. They left a lot of weak points below. So put an alert lower and see if you want to trade it on dips. If you're investing in it, just take a starter position. This is not easy to get into. Short term, you might start out a little bit red. It's a good company. Buy the dip next time with confidence. Colgate, not for me up here. 78.50, 79 look like a turning point. So make sure you know your time frames. Maybe $1.50 dip will get me interested, but probably not. Not for me. These stocks are not for me. CMA, is that another bank? Look how the range has tightened. So draw a box around 46 and 39 or 38 and you'd have your range. I would not expect anything outside that range for a while without a headline of sorts. So look at that wall. Yep, 46, maybe even 44.50 versus a 39.50 buyer. Comcast. Okay, bearish down to 40 would be more likely than to 43. But if they take this out, which is 42, they can get to like 44 maybe. Maybe one more dip. Why? Because if it dips, it draws an inverse head and shoulders. So what if they do this and then come back to here? Just be patient. And then if they're patient, they may hiccup here one more time, do this and finish the job. Something like that. That's doable. Let's make it less exuberant so people don't think, oh, Nick said go along. I didn't. I'm just playing out. It does have support down here and it has a lot of resistance, so give it another shot at it. Coin, I would step away from coin completely unless you're already in it. Here's my statement. If coin does not get to 57, likely to bleed lower to 40. All right, I still stand by it. They're making higher low. That's good, but I'm totally confused with the nonchalant. Look at sales. My goodness, the sales are like 1/3 of what they were a couple of years ago. Nobody's concerned. Maybe I'm just missing something. Anyway, just be careful. Make sure to study the company inside and out. It does have support into the 50 line and better support into 47, and a lot of resistance at 59. Costco, I shorted it. Wow, it looks like we did well. I shared a credit call spread and optional credit put spread, I'm pretty sure. Good support into below 518 and better support below 508. But look how much downside it can have. I said strong seller box just because I'm just reading what was happening. Big sell-off, big sell-off, big sell-off. It may have been the market itself, as Costco is a pretty good company. Yep, we sold a credit call spread up here. So if somebody sold that, they already have greens on their hands. And then if somebody double-ended it and tried to double-end it, they opened the credit put spread here. There's a lot of support. So that looks like a pretty good iron condor. I want to caution you that if they take out the 531 and they challenge this one, they will get here pretty quickly. It's easier to get here than to get to here. But if you have a portfolio that has nothing but credit put spreads and calls and whatever, having one credit call spread on something is not the end of the world. Campbell Soup, if you're serious about managing a portfolio, you need one of this in your bucket, because this one did so well during the tough market. I'll give you an idea. So October 2021 was death for the markets, right? We went straight down. Well, that's October 20 right here. That was the market's downfall. Look at what happened to Campbell, and look at what's happening to Campbell now. So if you want to not buy VIX but buy a company and hedge the market, why not get a little bit Campbell Soup? I can't guarantee that this will happen again, but that seems like in December of 2018 that was not the case. It was moving with the market, but for some reason for the last 2 years it's been against the market. So this was an arrow that I placed back then, I guess. I don't remember. Regardless, this was a top and this is support. So Campbell Soup, I would not get out of my longs. If I needed to have some longs, I would nibble. CrowdStrike, we bought the dip, and I would do it again. This dip on earnings, and then immediately paid us, and I would do it again. So this is a target of this red W you see on your screen. So maybe they're trying to do that purple path. Okay, I don't know why suddenly these purple paths don't show up on the weeklies unless I tell them to. Okay, so maybe they're doing this purple path. Dip a little bit, find some footing and break out. Ooh, they came close. I still like it around, see that white line right here? I have an alert around 144. We caught the dip. I sold naked puts and sold put spreads as well. Cisco, definitely not for me. If you twist my arm, I'll buy a put or something. Look at it. I mean, that is pretty great rally, but into it's going to fade either here or at 44. So buy it on dips below 49. If they don't come, so be it. CoStar Group. This is where it got hit hard 3 times before. 1, 2, 3. I guess here, this is 5 weeks, 6 weeks, month and a half of fights and ended up with the bears. This is 3 weeks of fights, ended up with the bears. The bulls had a great result, but that is pandemic money. So I would say the top is 87, 88, and it's at the top. How about buy the dips in that one? Where to? 82, 81. CVS. Okay, let's see if they're serious about holding the line. So they've had a double bounce on 66.5. If they lose that, they're going much lower. Maybe this is it. Maybe they just bottomed. And then you're going to face a lot of sellers into 70. That's your first test. And then if they do that correctly, then you have 71.2 and then 73. So if I'm long, it's too late to get out. I don't know why I would get long here from an investment perspective. So Caesars looks like it's placing in a bottom on a weekly chart. A breakout from 57 could get you 75. So that doesn't look easy. Just as hard it is to lose 31.5, but if you do lose it, they'll come back down to 10 or 15, which is unlikely. So I think it's going to be stuck between 39.5 and 55.5. 39.5, 55.5. I know it's a wide zone, but that's what it is. Shorter term, 47, 46.8 looks important. Look at that, nailed it. So if I wanted to put a line here, I'll put it here. And easy line up here is just the top. Okay, Dallas, DAL, Delta Airlines. I don't get it. Nice breakout on a weekly basis. Now it's running into tougher. So maybe they get to 46, but I think that's it's a fadeable event. This is an inverse head and shoulder pattern that could get you to 48. But man, I'm looking at airlines and I fly once a month now and I have no idea how they're making money. It's just a mess. It's a cluster. Every airline, every flight is overbooked and it's late and it's this and that. Although I did have an empty seat next to me the other day, which was pretty insane. What a gift. Okay, so let's see here. On a daily basis, I think it's shortable down to 38 or 37. I would not get long here. How about that? Deer. What did I do with Deer? I know I sold puts and put spreads, but did I short it now in the credit call spread? If you force me, I would sell a credit call spread. If it rolls back down and it loses this one, it could end up in the 280 area. And if it does, that means it triggers this one. So just look out for the descending channel potential. Are they selling rallies down to here or not? If you take out this high, you're going to the moon. So be aware of it. If you're short, don't be too short and have a stop. Dollar General, okay, so it looks like it's stabilizing. But I want to caution you that this happened because they had a 30% drop in sales. Now, the idea that I came up with, that maybe that's because everybody's spending like a fool, and when times get tough again, they're going to come back to it. So selling a put is one thing, expecting upside is another. I would not buy calls. Maybe I would sell puts on a bad day. Disney, we traded it well. Credit put spread. It's inside of a big range. It had the opportunity to do like Apple and it didn't. So I wouldn't hold my breath for this breakout. I would sell the put spread and wait to see what happens. It's a good brand. It has some political issues. If it loses 87, it may end up at 83. So it is also dependent on the market. For now, I think it's stuck in this white box. So that's just below 94 and just above 87. Okay, DigitalOcean. On this time frame, it looks like it's overextended. So I would buy dips into 40 or 41. That is my call there. On this time frame, it looks like, oh my gosh, it has so much more to go. It does, but I still think that it's easy to get here. It's not easy to get here. You have this to deal with, 54, and this to deal with. So I think 48 to 54 is super tough. Buy the dips into that neckline, which is 40, like I said, would be the better option. Devon, I would step away from all of these. Lower highs, they're trying to place a floor. Higher lows, so there's a move coming, and I'm not so sure it's going to be great to the upside. Look at their sales. So this might be a natural gas, production of oil and natural gas. So I don't know what the balance is. You need to study the company fundamentally. I don't think oil is, I think the whole world bought into this fake notion of an oil shortage, an oil crisis. Am I the only person that sees it? I could be an idiot. But I think oil is headed much, much lower because there is no oil crisis. We have more oil than we can imagine, especially if we're going all electric. So just from driving oil type of a deal. Anyway, good company. If you're buying investments, sure, it's into support. If you lose 43.8, you're going to the low 30s with a lot of support at 36, 37. So rallies are being sold. How about I say it this way? If Devon is not at 56 or higher and holds it, it could bleed down below 40. That's probably the fairest way. If it's not above 56 or higher, it could bleed down to the low 40s. Now I'll give you a check mark value, 53. If you don't get to 53 before you get to 45 point whatever, you're going to bleed lower. I think this is supposed to be end phase, so we will do end phase. Actually, yeah, we'll skip that one here. End phase. There you go. We bought the dip. I said you could buy calls. I didn't. I sold puts and put spreads, and I've enjoyed the win without having to sweat. If it breaks out of 188, and that's a big if, it can finish that arrow. Otherwise, it's going to linger here. It's got strong support and strong resistance. Good company, good tech. It will follow markets. If it falls into 170 or lower, I will be interested in it. So I'm going to put an alert for myself here and an alert for myself here. And I would get long by selling more puts. It's the easy way to win that way. Look how pointy that area is. Those are not coincidences. ET phone home. Energy transfer. 9% dividend. Oof. Okay, why? So this is way too high for me. But it does pay a 9%. And keep in mind that if you have a 9% drop, you eliminated that. So if you know the company and you hope that it breaks out of 13.5, you can get to 16. Wolf Wave says much lower. I say it has support into 11.8, 11.6. If you lose 11.6 or 5, you're going down to another dollar. So let's look at it this way. You have super strong support at 12.20, much stronger support at 11.50, and incredibly good support at 10 into 10. So if one of these lines is lost, becomes a catalyst. So if they lose this one, they will test that one and lower. If they lose this one, they will test that one. Okay. Etsy, I would be long shares for the long term. I would have gotten into a bullish opportunity by selling puts. I personally could not sell puts because I'm testing my abilities to sell puts only in a small account, and they needed me to take out $3,000 worth of margin for one sold put. I don't understand that. When I sold a put on Twilio, they only needed 400. Why is this stock requiring so much money? So there's something baked into this that market makers are afraid of. Just for that, I'm concerned. I will buy the dip. I'll put an alert by selling put spreads. I cannot sell a put. I have recommended those put spreads before and sold puts. And look at this candle from the earnings. Hi, Jacob. How much did they charge me for the empty seat, Brad? No, they didn't. EWZ, that's, I believe, the Brazil. Definitely not a starting point. If anything, down to 30.5, I would be interested. So go back to the neckline. Up here, definitely not for me. Shortable, maybe if you know it. I don't know much about it. Thank you. Happy Father's Day to everyone out there too. FCX, shortable. It looks extended, but look, it's kind of a messy. So they could get to 42, but I would not be looking to get longs unless it's on dips. Okay, dips into 38 would be better entry opportunities, but magically if you get to 36, much better. So there is a target one is at 37, 36.50, but this will be negated if they can make a higher high than last week. Fifth Third Bank. Wow, the name just flows right off the tongue. Fifth Third Bank. It's amazing. That's like a sister company to PIMCO, you know, the Bond King. I have friends that work for both. So Fifth Third Bank, if above 27.40, they can get to 31. But that, why would they want to do that? So I don't know if that I would be chasing that opportunity. For now, I think you can build a box around 27.30 and 25 and be stuck inside of that. First Solar, I did discuss it. I cannot believe this. I cannot believe this, how closely this thing is moving to my forecast. So this forecast was based on copy paste, and look how closely it tracks it. So let's see what happens next. Oh, I pasted it again. Like, what if we repeat it? Look how close that forecast was to reality. You don't see it here. So let's do it here. It should be visible. I don't know why it's not showing up. Interesting. Okay. I think it can have a higher low. A lower high. And if it does make a small higher low, then it's stuck inside of a range. Tricky stock to trade. I'm going to tell you there are sellers at 230 and buyers at 175. Whichever line breaks first will become a catalyst. So if they lose 175, they're going to have a $20 dip or so. If they take out 230, they're going to have a $20 rally or so. And with that, we go to the end of video 1. I will stop recording.